Are you leaving money on the table, or worse, losing it without even realizing it? When it comes to investing, choosing the right platform can make all the difference, especially for those just starting out or looking for a more streamlined approach. Today, we're diving deep into a battle of the investment apps, Acorns versus Robinhood. Which one truly reigns supreme for your financial goals? For years, these two platforms have been at the forefront of democratizing investing, bringing the stock market to millions of everyday people who might have otherwise found it intimidating or inaccessible. But while they both aim to make investing easier, their approaches, philosophies, and target audiences are vastly different. Understanding these nuances is crucial before you commit your hard-earned cash to either. Let's set the stage. On one side, we have Acorns, the set-it-and-forget-it app, famous for its roundups feature that invests your spare change. It's built for the hands-off investor, the person who wants to build wealth passively without getting bogged down in market analysis. On the other side, there's Robinhood, the pioneer of commission-free trading, known for its sleek interface and focus on empowering individual investors to trade stocks, ETFs, options, and even cryptocurrencies with zero trading fees. This is for the more active participant, the one who wants more control and direct access to the markets. So, how do you decide between a platform that essentially invests for you and one that puts the trading power squarely in your hands? We're going to break down every critical aspect, their core philosophies, target audiences, features, fees, investment options, user experience, and even recent developments that might sway your decision. By the end of this comprehensive guide, you'll have a clear understanding of which platform is the best fit for your unique financial journey in 2025. Let's start with their core philosophies. Acorns operates on the principle of micro-investing and automated diversification. Their belief is that small, consistent contributions, combined with intelligent portfolio management, can lead to substantial wealth accumulation over time. They emphasize long-term growth through diversified portfolios of exchange-traded funds, or ETFs, which are essentially baskets of various stocks and bonds. You pick a risk tolerance, and Acorns handles the rest, automatically rebalancing your portfolio to maintain your desired asset allocation. It's about making investing effortless and habitual, helping users build wealth without feeling like they're actively managing their money. They want you to grow your mighty oak from Acorns. Robinhood, on the other hand, was founded with a mission to democratize finance for all. Their core philosophy revolves around making investing accessible and affordable by eliminating commissions on trades. They believe that everyone, regardless of their net worth, should have the opportunity to participate in the financial markets. This ethos translates into a platform that gives users direct control over their investments. While they offer some educational resources, the emphasis is firmly on self-directed trading. They empower users to choose individual stocks, ETFs, options, and cryptocurrencies, fostering a more active and engaged approach to investing. Now, let's talk about who these platforms are built for, their target audience. Acorns predominantly caters to beginners, millennials, and Gen Z who might be new to investing or struggle with saving consistently. The Roundup feature, which automatically invests the spare change from your daily purchases, is a huge draw for this demographic. It's designed for those who want a simple, low-effort way to get started with investing and build good financial habits without needing to be an expert. If you're someone who wants to save and invest without constantly thinking about it, Acorns is designed for you. They also appeal to parents looking to open custodial accounts for their children. Robinhood, while also attracting a significant number of first-time investors due to its commission-free model and user-friendly interface, also draws in more active traders and those interested in a wider range of investment products, including options and cryptocurrencies. Millennials and Gen Z are still a key demographic, drawn to the mobile-first approach and the ability to trade directly. Robinhood's expansion into features like its 24-hour market and lower margin rates also makes it appealing to more experienced traders looking for cost-effective execution. If you enjoy researching individual companies, want to dabble in crypto, or are keen on options trading, Robinhood is geared towards that more hands-on experience. Let's move on to features, because this is where the differences truly become apparent. Acorns offers a suite of products designed for holistic financial wellness. Their main offering, Acorns Invest, provides diversified portfolios of ETFs managed by experts. You answer a few questions about your risk tolerance and goals, and they recommend a portfolio. Beyond that, Acorns is known for roundups. This signature feature links to your debit or credit cards and rounds up purchases to the nearest dollar, investing the difference when it reaches $5. It's a fantastic way to passively invest without feeling the pinch. Acorns Later. This is their retirement account offering, allowing you to easily set up and contribute to Roth, traditional, or SEP IRAs. They even offer an IRA match on qualifying contributions for higher-tier plans. Acorns Checking account with a debit card that offers no overdraft or minimum balance fees and earns interest on your uninvested cash. It even has features that can help you save and invest as you spend. Acorns Earn. This feature allows you to earn bonus investments when you shop with their partner brands. Educational resources. Acorns provides financial education and insights to help users understand investing concepts. With that said, thanks for watching, and until next time.